The S&P 500 and the Nasdaq 100, as you can see, the Nasdaq has been trending sideways for essentially since the end of February to right now, trending in a just in a range, right? Now, as we zoom in more to the action here on the day, we can see we had a little bit of volatility to get the day going, to where we basically have the morning start off, big drop, and then consolidating back to the upside. Now, the overall consensus here is that you're still making higher lows, and ultimately, you're still in structure and trend and in said range, buyer stepping back up. Now, the one thing that I will continue to add here is that you are getting volatile drops to the downside here on the Nasdaq periodically, right? Since you've been in this range, but then buyers step back in, push you back to the top, and then we kind of just repeat the entire process. Now, there's a few things that you need to be considering going into tomorrow around the stock market in particular. The biggest thing is going to be CPI coming out tomorrow. This is the biggest thing. Again, an hour before market open, CPI will drop. Now, what I will say, I repost this on Twitter so you can go check it out. These are the expectations for CPI. 37.5% chance CPI rises to 0.2 to 0.3%. 35% chance CPI gains between 0.3 and 0.4. 15% chance that it climbs just 0.1, 0.2. 10% that's 0.4, which is terrible. And then 2.5% that it's flat. So this is the most positive scenario right here. Understand, 2.5. That's the most positive. Okay, understand that. And it's the least likely. Okay, so these are the expectations of what you'd be looking for and what you'd be ultimately wanting to happen, right? This specifically the 15% or the 2.5, and I would say the 0.2 to 0.3 is the most likely scenario here. You go back to expectations, and expectations are that you only rise 0.2 on core right now. Very important to understand. There are actually headlines. So if we go back and you look at what's happening there, that's where we're at ultimately and what you're expecting there. Now, again, there's some pretty bad expectations, and if it rises, that's where it comes back into play with making some educated guesses here. Because let's talk about the case if it rises. Does it really change the narrative of the Fed and what Powell has said? You saw Bullard, you saw Fed Bostic, I believe, come out today and basically said that the base case for this year is 3 cuts. That's the base case. And we're almost halfway through the year now. So when we look at that, that's pretty good still. There's no, reducing to 2 or to 1. The base case is still 3 cuts on the year. And, the fear of what's dropped this market time and time again has been, are we going to push back cutting rates further? Or is there not going to be 3 cuts? Because 3 cuts has been the base case for some time now as far as the Fed is concerned. And it seems like nothing's really bringing us down on the market, right? Or can really get us to follow through. And this is the important viewpoint. You look here, you come to support and you bounce, and you just bounce and you bounce and you bounce. We go to SPY, get a better look here. I mean, SPY looks better than Qs. We'll go into Qs here in a second to give you a better visual, but structurally a little bit out of the range, but just consolidating above key levels and supports. That's really what you have to pay attention to here. You're still sitting above that 518 level here on SPY. After hours, you still look great. All things considered, today ended as good as it could have ended. Worth mentioning. Again, you go to Qs, you look at what's happening here. Again, holding the line, holding your level, 440 roughly, trying to get back into 447 to really get bullish, but you're still basically at highs. So when you have that delusional person in your ear saying, oh, we're bearish, the sky is falling, this and that, I say that we have to wonder, has the case really changed on cutting rates? Has the case really changed on it being an election year and we have Bitcoin halving and all these bullish things that seem like they're on the horizon? Has the case changed for those things yet? And I would say that no. Right now, we're literally just consolidating at highs. If you look at this, it's actually more bullish than what we had back, July through basically October, to where we actually had lower lows and lower highs established. And, people didn't want this to be bullish, but it was. And you ended up shooting back up and, we were in denial. And that's just what the reality was. So should you buck the trend and start going short? I don't think the play's there yet. Now, if you start breaking below 432, you make some lower lows here, then we can talk. And that's only like 10 points away on the Qs in particular. So I don't think those are off the table, but I think jumping the gun here is 100% off the table, especially with how we're reacting from these lows continually. Now, a few more things here too. Some bad news that came out overnight. Israel, Iran stuff escalating again. It doesn't seem like the market cares too much about this though. Again, I believe in Iran, an embassy was attacked, something along those lines. Israel did not claim it, but Iran is seeming like they're going to retaliate, which would not be buenos nachos for anything to do with US oil and crude, which has had a negative impact on inflation data. We've seen, oil rise since the beginning of the year. Worth mentioning, which should negatively impact CPI and PPI. again, things to consider, right? So this is the one area when I do look at CPI, I'm like, this is pretty bad that oil has been on the uptrack. Maybe, I mean, about $10. So, I mean, that's definitely concerning. So we should see that, affected into the CPI readings, but we'll have to wait and see. Let's not jump the gun there. But that's the biggest thing here as far as risk on versus risk off and what we're paying attention to. Okay, so understand that. You also had Jamie Dimon do his shareholder briefing yesterday. Wasn't that terrible? Really wasn't bad. He has voiced his concerns on the overall market, but some of his biggest comments have been about what's happening with AI. And he's, analysts are saying his comparisons are comparing this to the fourth industrial revolution. He compared it to the steam engine, electricity, computing, and the internet, and among others, and the printing press. So I would say that we're having a pretty significant surge in our market for a logical reason. For everyone calling AI a bubble, is it really? When we look at the money coming in there? And the important thing with Jamie Dimon to view from JP Morgan, whether you believe they're corrupt or this or that, the one thing that you have to look at is simple. Is what do they care about? They care about making money, making shareholders money. I do want to say right now, I want to briefly talk about one of our favorite investing apps and the sponsor of today's video, Moomoo. If you're interested in using the exact same broker that I'm using personally, you can check them out. I use them every day to trade options, and I do my market research, whether I'm posting on Twitter, posting on TikTok, etc. Now, again, if you're looking to make that switch, there's never been a better time, because right now they're doing a pretty big promotion, and they're doing promotions every single month. So you can actually check it out with the link down below. New users right now can transfer in from another account without any transfer fees and receive 1.5% cash back up to $300. Or if you're just getting started signing up, I'd be able to do a $5 into each of the Magnificent 7 stocks when you make a qualified deposit, which isn't that much either. But again, check all the information down below. The link is down there. So if you want to support the channel, it's all there. Again, check them out. That's who I use for my option trading. They're my favorite. They're what I'm using now. Let's get back to it. So again, what we're looking at now, we go over some of the data and what we're tracking out here on the volume aspect as well. Okay, now really quick, the volume is really interesting here as well. Now, if you've been tracking the channel whatsoever, then you know that I love to look at volume. It gives me a great viewpoint of the market and what's happening. Now, we are on track to actually have some normal behavior here. Monday, terrible, 48 million volume, awful. 60 million, hey, at least we're on the upside. So as you can see, that data is trending back in the direction. We expect to see more volume tomorrow, and it would make logical sense with CPI coming out early in the morning, which should give us some direction. But I want to say this right now. I believe from CPI, I'm not saying there's no downside opportunity. I do believe 100% there's downside opportunity if CPI comes out terrible. But if CPI can surprise us to the slightest, right, of coming in flat, slightly up, the market will interpret it as extremely bullish. Now, I'm telling you, there's things stacked against you when it comes to CPI, especially with what's happening with energy. But I will say that it will be incredibly bullish. Take it for what it is. That's my interpretation of what's happening here with data. Wednesdays and Tuesdays have been our worst days of the week as far as going red. But what I will say is Wednesdays have been perking up. Thursdays have been that really big turnaround day. Increase of volume, getting a real pivot in the market. So again, Wednesdays have not been the best day to trade to the upside. That is for sure when we look at that data and those analytics. So make sure you pay attention. Edgefull's link is down below if you're interested in that data and what is happening there. So really quick, before we jump back into that, let's jump really quick into SPY, give you the levels, what you're watching, what you're paying attention to. Now you can see that we continue to bounce down here, and I wouldn't even say there's a great support down here. It's the fact that sellers have no continuation. So you do have to assume if we get some bad data that you could possibly get that continuation to the downside and maybe break that 508 massive support. But to get bullish, I'm going to be very transparent and clear. You have got to break back above our level up here around 523, 524. That Lux algo level, break and retest, get that mount. Hopefully, right? That break, retest, and then mounting back to the up. That's what you have to and want to see. Okay, so pay very close attention to that. So ideally, if you get good data, a gap above, you get the retest, and get that continuation back into local highs. Same thing on Qs, right? You got to get back above 447. You get back above 447 on Qs, and you're cooking. Now, again, if you're looking at our levels, our indicators, everything on our chart, all that information is from Lux Algo down below. They're also running a special, just to let you know, code OD40 for 40% off. I don't know how long it'll last. They just give me the promos. I tell you guys, do what you want with that information. You got our volume indicator, everything down there. We're working on a VPVR one as well. So hopefully that should be out as well. But again, what we're looking at, how you're moving right now on Qs. Now, we're going into the good part now. This is all we really care about. I've gone over DXY. Don't really need to go over it anymore. Risk on, risk off. CPI will dictate those movements. Now, let's go over a few names. Now, NVIDIA, I continue to say this. I hope you paid attention. Also, too, if you paid attention to the newsletter, you probably did well. So, again, on NVIDIA, you can't be bullish to get back above 924 or at the very minimum back above 896. Okay. Now, what I will say is Jamie Dimon was very bullish on all things AI. So I will say that I anticipate big buyers are going to be buying back into NVIDIA and these AI names all on these dips. My personal opinion. I also think NVIDIA's earnings are going to be massive this coming quarter. But in the short term, again, you're making lower lows and lower highs, so you just can't be a crazy buyer here. It's also very surprising. Now, you can see the Lux algo level that we've developed down here, but it's also very surprising that you did not fill the gap today down to 823, 824 right here, 823.65 to be exact. But you did not fill that gap. Very strange. I was talking to Jay about it, and that was just the weirdest action that we had. So definitely looking for that gap fill. Weird that we didn't fill it, but nonetheless, get it back above 896 bare minimum, get back above 924 for confirmation to the upside and breaking into 1,000. That's my opinion. AMD, again, 164, very close to your target. You just never hit it. You got to get above 174.7 to even remotely get bullish. That's been your massive level, but you need to get back above 185. 185, and I think AMD is one of the easiest longs out there. It was your previous all-time high that you established in the first breakout right here, 185. You broke over that. You ran literally like $50. It was crazy. And then you see rejection nonstop at that level again. So what I'd be watching, what I'd be paying attention to there, specifically on AMD, still like it, but again, pretty weak. If you get below 164, London bridges falling down. That's all I got to say. Robin Hood, I have to cover them because it's been one of my favorite names. You're still making the higher lows, trying to hold up. This could start falling. I think Robinhood long term is like the easiest buy for myself based on what they've done with earnings, based on what's happening with crypto, based on what they're doing with their platform. I think it's literally one of the easiest buys of all time. Again, 2026 contracts are literally dirt cheap for myself. 2025, I don't know how else to say it. So I still love them. Yeah, a pullback is honestly awesome here. So I like them a lot. Above 19.4, you hold that, and I'm really bullish there as well. Target, I'm trying to cover names that I have long dated as well. Hood and Target are like my only positions dated right now. Target, you're bouncing here on the day. You got to just get back above the 200 SMA. You hit 181 our first target. You came back 200, you lost it. Get back above. I mean, dude, I'm telling you, like Target too. Based on earnings, based on performance, if the market starts getting back to where it was, getting back to getting the breakout potential, it's just consolidating right now, but you get that breakout, I have no doubt in my mind that Target goes into 200. Personal opinion. Do what you want with information, do your own due diligence, but yeah, watching that specifically. Coinbase, been watching these guys. Again, I love Coinbase. You had to mount your key level of 261.4.5. You couldn't do it to get back into 272. Tough. I'd be looking for 224 if you start to break back down. Bitcoin is dipping right now. However, I think you're going to get an overall direction with the market tomorrow. Just going to tell you right now. So if the market gets hammered from CPI, I think Bitcoin follows suit and probably dips into halving. It would just be highly likely. But until then, if market comes out good and the data continues to prop us up, you're clearly making higher lows here on Bitcoin since you made that pullback from all-time highs originally, right back down to like 61K. You've just been making higher lows. So you can't really complain there on Bitcoin. And it still looks pretty decent. Still looks pretty good. So things to consider, things to definitely be watching, right? Two of the other names we've been talking about a lot, Amazon, Google. Amazon broke the ascending triangle we talked about. You push into 186, 187. Can't do nothing with that right now. Just consolidating at highs. Google looks like the train that just doesn't want to stop, to be honest. You broke out of your ascending triangle down here of like 151.5, and you broke, retested, and now pushing back up. Again, it looks amazing. I think you're running towards 160. It looks good. You definitely can't complain. Tesla, I really just don't care until you get back above 194. Apple, again, I think Apple's one of those names I can only look at it from a viewpoint of buying stock for myself, not trading options. Down here, I just think value-wise, it makes sense. 168.5. My goal with any stock that I'm buying is to just buy on dips all the time. That's my mentality if I'm buying stock. So you're holding support overall. Options viewpoint, I have to understand you're making lower highs and you're kind of making lower lows. concerning. So if you lose this 168.5 level, it could get ugly to 167.7 and then down to 165.7. So those are my levels I'd be watching on the downside. So I think stock makes sense. Options, pretty risky here. But again, the risk to reward, even if I, chart it out that way, I'm just highlighting, right? Back into even local highs here, it's still, I hate, again, 1 hour trades aren't something I'd be looking to take, but it's still almost like there. And if you're looking back into local highs, back into 178, which is almost near the 200 SMA, you're still like a 2.5 R in the swing trade viewpoint there as well, right? And then if you want to raise a little bit, it's like 167. It starts to make more and more sense. Now, I'm not trying to convince myself to buy Apple options, but again, I think Apple's probably the biggest value name out there right now, especially when we look at Mag 7 and what's happening there. Some of you might be saying Tesla's that name, but I think Tesla has a lot more risky things on the horizon than Apple, personally. Like, I think Apple's not going anywhere. I don't think Tesla's going anywhere, but I think Apple's just like a safer name, which I can't believe I have to like say it like kind of scared when I mention Apple, but it is what it is. So anyways, that's what I'm looking at. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one, traders.